What's up, everybody? This is Digital World Podcast, and let's get right into it today. So, Coinbase is and other exchanges are continuing to move around huge amounts of XRP, and we see here that over the past 20 hours, major exchanges, including Coinbase, have transferred a staggering amount of 279.3 million XRP coins in lumps. So I'm wondering if they're gearing up for something to happen, or what's going on. Or maybe they're expecting a huge influx of people coming in and buying. Maybe exchanges are gonna let start trading XRP again. I don't know. Maybe it could be that there's something happening behind the background that we don't know about. I won't speculate on that because I'm not sure, and I don't want to bring up things that may not be. But it's just very interesting to see that they're moving a lot of XRP around, even during this SEC lawsuit. Now, I wanted to show one little clip of this episode that I showed a little bit about yesterday, and look at what he has to say. I think it's very interesting.
He believes cash will continue to be trash.
Oh, sorry. Let me go ahead and rewind it a little bit. So I had it on 2 speed. Okay, let me see right there. Here we go.
Borrow cash rather than hold it as an asset and buy higher returning investments. He says if history and logic are to be a guide, policymakers who are short of currency, he says money here, will raise taxes and won't like the capital movements out of debt assets and into other stores of wealth and other tax domains. So they could very well impose prohibitions against capital movements to other assets, including gold and Bitcoin. Now, what that means is that you want to have these assets before they do that, because they're going to be trying to encourage you to sell them. And so they're going to make it harder to buy these assets if that happens. However, the last time that the U.S. When we made gold illegal for American citizens to own in 1934 through the end of 1974. In 1934, gold was our base currency, and what they wanted to do was inflate, and so they were making gold illegal and recalling the gold that was in circulation, those gold coins, so that they could inflate. Today, there's no connection between the US dollar and gold. There could be at any moment because the central banks do hold it as an asset. But then this goes on to say that the United States could become perceived as a place that is inhospitable to capitalism.
So essentially, I'll stop it there. I think the first part of it was very interesting in how he gave his perspective on how he thinks that it's better to position yourself before. They'll probably want you to sell out of your gold or your crypto, and one of the things is we know what cryptocurrency brings. Some of these coins bring utility, and not all of them, but I think that it's very important that you position yourself. But be careful out there because it's a very crazy and volatile space, and you don't want to invest into something that's already gone up. So that's why when we talk about XRP, it's a very suppressed coin at this moment. It hasn't had its bull run. So um, based on that fact and that it has utility, right now the price it's at is a bargain. So why not invest in it? Now, do your due diligence. I'm not telling you to just blindly go and invest, but look into it and make sure you're informed about it. Now, Digital Perspectives posted this, and it's funny because I did a video on the Swift messaging system earlier, and I was looking over at one of the documents. I'd recommend you go back and watch it. But here they're saying we're transforming the Swift platform to enable instant and frictionless transactions from account to account anywhere in the world. Find out about our new info paper, Swift platform evolution. So now they're trying to, innovate and get on board with everything that's happening. But I have a feeling that they're feeling the pressure to innovate because Ripple is creating this new technology that is allowing banks to participate and do transactions almost instantaneously and at the fraction of a cost. And so it's putting a lot of pressure on Swift. Let's go here. Let's watch this video by Digital Assets Daily. Thanks to him for posting this, but look at what they're promoting here.
Together, we are at the heart of the global financial system. We move the transactions that keep the world's economies working. Transactions that represent real business ambitions and the livelihoods of our friends and family. What we do underpins the world's way of life. Today, that way of life is changing faster than ever. At Swift, we are evolving too. We use our expertise to help our community move faster and work smarter. Payments and securities transactions should be instant, frictionless, and transparent. They should have end-to-end integrity and global reach. This entire process should be driven by smart data and shared services to unlock huge opportunities, to help you strengthen in existing markets and open bold new possibilities for the future. We've laid the foundations through game-changing services and technologies that are already transforming the industry. Now, we're going even further, taking innovation to the next level by transforming the Swift platform with new capabilities so you can reduce costs and offer increased value to your customers. We are delivering the infrastructure to help you adapt, thrive, and grow, and together, shaping the future of payments and securities faster, smarter, better.
Well, you see that. And I think it's funny how they mentioned earlier in the video their livelihood depends on it. They don't want to get beaten out, huh? When you're handling billions upon billions of dollars in transactions, yeah, you don't want to lose that business. So, I mean, it is what it is. You stay with the current or you get left behind. Now, I want to play this video again because of how important I think this is, and it's good to reiterate why Ripple it has been able to work with central banks. Listen again to what I believe it's Navin Gupta is saying.
Suddenly there is a 10% decrease in your total working capital requirement. And when we explain this to the central bank to essentially say, hey, just by increasing the velocity of money, exactly what they're trying to do in the domestic payment system, we are able to do it in a cross-border payment system. And you are able to get a higher growth rate because we are able to turn around money much more faster. Exactly. Think of money as inventory, and then you are churning into more cycles, and hence you are able to get a better GDP output or a better growth rate. They love it, right? And the other part that they love is that we work only with regulated financial institutions, because one thing central banks worry about is unregulated, unscrupulous actors essentially getting into the space which they are not able to manage. But once we are working with banks or PSPs who are already regulated by the central bank, they have already seen 10, 20, 30 years of performance and behavior from them, then they feel totally comfortable, because then they say, even if it's a new technology, what we are doing is we are empowering existing players to become better. And then, of course, the benefits to be passed on to the citizens or to the corporates whom the central banks serve anyway.
I hope this episode has brought you some value. Like and subscribe, and let people know that Swift is their livelihood depends on it. This is the Digital World Podcast, and I'll see you in the next episode.